Have you ever wondered about the best way to grow your money? On one hand, you have saving, the steady, safe approach. On the other, investing, the strategic, growth-focused path. Today, we'll break down the key differences and show you how to use both to build wealth. Saving is for your short-term financial goals. Think of it as your safety net. This is money you'll need in the next 1 to 5 years for things like a down payment on a car, a big vacation, or an emergency fund. For your emergency fund, financial experts recommend having 3 to 6 months of living expenses set aside in a high-yield savings account. This protects you from unexpected job loss or medical bills and keeps you from touching your investments. Investing is how you build long-term wealth, like saving for retirement. The earlier you start, the more powerful compound interest becomes. That's when your earnings start to generate their own earnings. With investing, you take on a bit more risk for the potential of higher returns, which helps your money grow faster than inflation over time. So where do you put your money? For beginners, exchange-traded funds, ETFs, or index funds are a great start. They bundle many stocks or bonds into a single investment, giving you instant diversification and lowering your risk. You can also invest in individual stocks, also called equity, are when you buy a small part of a company. Each part is called a share. When the company grows in value, your share becomes more valuable too. It can be exciting, but carries more risk than a diversified fund. Bonds are a safer option, but with some trade-offs. They're basically loans you give to a government or company. In return, they pay you interest over time and return your money at the end. They offer more stability. One of the smartest strategies is called dollar cost averaging. This means investing a fixed amount of money at regular intervals, regardless of market conditions. It takes the emotion out of investing and ensures you're buying more when prices are low and less when they're high. Most online brokerages allow you to set up automatic transfers to make this easy. Remember, both saving and investing are critical for a healthy financial life. Saving builds your safety net, and investing builds your future. The key is to start now, no matter how small the amount. Take that first step and build a plan for your financial freedom.